What's going on, traders? Welcome back to another video here. So I thought I would take a second to talk about the stock YECO. As many of you guys know, this was a massive runner recently, and I want to point out a setup here on the chart. If you were to go right now and just look up bullish patterns on the internet, you're going to come across something that looks like a symmetrical triangle, or what's called, a bullish pennant, and that looks something like this, okay? It's like a triangle, and ideally the price action kind of does something like this, and then it kind of bounces around here, and then eventually leads towards a massive push out of it. And YECO was this penny stock that turned into a 1,000% runner over the past week or two, and it had a perfect bullish pennant setup here just the other day on the stock, right here. See, when I map it out like that, it looks very easy to spot it. But when you're just kind of looking at it like this, you're like, okay, it looks like the stock may just kind of did something here and then it ran. But realistically, this was a perfect bullish pennant pattern right there. So, a lot of what this would be called buying right here essentially be, buying the breakout of the bullish pennant, right? So we'll do a quick little mini lesson here. All right, so this here is a bullish pennant, okay? And I'll show you kind of the process new traders make as the mistake here. Actually, let me redo that. Something about it just didn't seem good. So I'm going to redo that. Okay, and then we'll go right there. Okay, so this is a very common mistake you'll see a lot of traders making, okay? So a lot of traders find it hard to spot the patterns as they're occurring. The pattern was, this whole pattern right here was forming the whole time, okay? The whole pattern was forming from right here, 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 up until the push and then through, okay? But most traders are gonna find themselves buying these setups too late, okay? So a common mistake we'll see with the newer trader is they eventually figure out that it's going to start moving, right? And they start buying at this green line. They try and buy the breakout over the previous high, right? This breakout over that previous high. That right there is the no. You don't do that. You don't buy right there. At that point, you're buying high and you're buying at the wrong time. So if you come across some stuff that says buy over the previous highs, sometimes they can work, but for the most part, you're usually taking the wrong entry or you're taking it way too high, okay? So what I advise is, realistically, this would be right here, this green arrow, that would be buying the breakout of that particular pattern. That's not a bad buy entry, okay? That's a really good buy entry, okay? Now, just because you buy right there as soon as it starts breaking out doesn't mean you're going to get filled at $7.80. Realistically, you could be getting filled all the way up here at 8, and maybe even a little higher depending on how quick you were to get in, okay? So we're going to walk you through this. This is realistically what's going on in this whole setup here, okay? What happens is this price goes crazy and everybody thinks it's the top right there, okay? So you get this big sell, and what happens right here is you're going to get a lot of people coming in, and what they're doing is they're shorting the stock, okay? They're getting short because they think that this is the top, and then from here the stock is going to go down and it's going to crash, right? That's what's happening, okay? So when the stock starts to drop from this big move down to here, what's happening is people are, there's some people that shorted this and they start covering, but a lot of people are starting to buy this up, okay? And then when it drops right here, they buy more, and they buy more right as it's starting to break out, okay? So realistically, the whole process here, okay, let me get some of the stuff off. This whole process looks like this, okay? If I were a trader watching this, okay, this is like the phases of a trader, right? When you're just starting, you're probably going to find yourself buying here over the previous high break. This breakout over that previous high, that's where you're going to find yourself buying. That's a no-no. That's just bad, right? The very, very, very beginner traders that have no clue what's going on, they're probably buying somewhere up here thinking it's going to keep going. When realistically, they missed the entry long, long ago, okay? So then the newer traders that get a little, no, I would say newer traders. So you have the new traders that are buying way up here at the highs, okay? And then you have the traders that are learning more, a little bit more advanced, buying down here at the pivotal moment, right? The really good traders can get in here just before it pushes. The pretty good traders are going to find themselves buying just as it starts to break out. So they're probably getting filled in the 8s, or they're probably getting filled right here around 820, okay? But the traders that really know what's going on, you're going to find them buying all throughout here. Now you're going to find those traders buying here, here, and here, okay? These are the guys that really know what's going on, okay? So again, this is kind of the process to walk you through that whole process here once more, okay? So bullish pennant, right? Symmetrical triangle breaking out, okay? What's going to happen is you're going to see your new traders or newest traders buying somewhere at the highs. When a trader becomes a little bit more advanced, you'll find them buying here at the breakout. When they become a little bit more advanced, they'll probably be the ones in just before the breakout, okay? When they're really advanced and have been trading for a long time, they're learning how to buy in the dips right here, here, and just before the breakout. They're starting to size into their position, maybe buying 500, and then they maybe buy another 500, right? And then maybe just before they know it's going to break out, they'll buy like 2,000, right? So now they're in a total of 3,000 shares. And what's going to happen is this thing starts running up. They're going to start selling those shares immediately. This stock went from $7.80, right, from the breakout point all the way to a high of $9.20. So imagine holding 3,000 shares. You're adding in here, 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 here. So your average is probably around 760s, 740s, and it shoots up to a high of 920. You're making $3,000 on that move, okay? So taking a step back, okay? So if we take a step back, I got to erase all of this here. So if we take a step back here, right? So imagine you have the guys adding in down here on the dips. They're buying the dips and they're selling the rip, okay? It's a common term, wording saying buy the dip, sell the rip. So you have these buyers in here at these dip points, right? So then you also have these, just getting to the point of understanding everything that's going on, right? You have these intermediate traders and they're starting to buy the breakout, right? So you got to think, okay? People who buy the dips are obviously making the most money. The people who get in right at the breakout, they're making good money. And then you have, so the yellow arrows represent very advanced trader. The red arrow represents the intermediate trader. And then the blue arrow represents the newest fresh meat on the market, have no clue what they're doing. They're buying here and they're buying here, okay? Absolutely no clue what's going on, okay? So think about it. The way it really works is the advanced traders buy the dip. They start to form the curl up when they win the battle over the sellers. They start to form the curl up. And once the breakout buyers or the intermediate traders have figured out what's going on, they start to all buy right here, okay? You can see the volume pick up. So realistically, all the breakout buyers and intermediate traders are the ones that really start the move, the big move for all the advanced traders down here. So the advanced traders are making all their money off the intermediate traders, okay? So as soon as this pops up, right? So this is the way it's going to look. Let's go back. Let's refresh this, get it cleaned up. The way this is going to look, again, is you're going to have your breakout buyers come in. So this yellow arrow, or sorry, this red arrow will represent where the advanced traders, all the advanced traders are starting to sell into this move, right? So we've bought down here. Then it breaks out. The breakout buyers come in. They push the price up for us. We start selling right into the breakout buyers. So all the breakout buyers are starting to buy shares from the people buying the dips, okay? And then the new traders, okay, the new traders are buying up here. So these new traders are starting to buy from the sellers that bought the breakout. And then the new sellers don't have anybody to sell into because they're the only ones buying up here. So they find themselves being the ones at the top selling out on the move down, okay? So again, it's like a three-step process, right? And it really goes from, you know, number one here are the advanced traders. They buy, right? And then they sell them into the number two, which are the intermediate traders. And then number two sell into the number three, which are the guys that have no clue what's going on. So understand that. That's the process. Buying the dips, let the breakout buyers run the price up for you. And you can also be a breakout buyer. There's nothing wrong with being someone who's buying the breakout. Absolutely nothing wrong. But there are people who have been getting in way before the breakout, and what their main goal is to do is to push this price up, get the pattern to form. Okay, once it forms, the breakout buyers will come in, they'll slam the price up for everyone. The advanced traders start to sell into the breakout buyers as they're buying the shares up, and then they'll let some ride. And then the idea of the breakout buyer is they're running this up and they're just trying to get it out to somebody willing to buy up here. And then you have those traders that have no clue what's going on, getting up way at the top, and then they get crushed, okay? So that right there, ladies and gentlemen, perfect example of a bullish pennant and a nice pop thereafter. So I hope you guys like the video. Do stay tuned for more videos to come. If you guys like the videos, do please give me a thumbs up, share the video, and also subscribe. If you ever want to join into any of our premium chat room services and day trading courses, it's all going to be linked in the description of the video below. You can join our team. Very, very cost-efficient program if you're looking to get or pick up some more knowledge about trading. So thank you guys once again for tuning in, and we will see you on the next one.